Welcome to TradeTheMBI.com. This is John. This report is for the 3rd of October. Well, we started off the week with a decent little press. We came all the way down to the ABM yellow. Flat back, finished right in the middle, pretty much right where we were from the previous day last week. Nothing too dramatic. Just nothing in the news that's shocking per se that's causing any real activity. We had a little bit of a bullish run here with the short-term buyers, but seemingly it's already started to begin to fade here as we're developing a short snake on this little bullish pump right now that's taking place pre-market. So that'll be an interesting factor from a daily. We already saw it from the NASDAQ standpoint, and it's been weaker in general. So that's already presented. Now, when we're talking about weakness, how much weakness are we really talking about? Not that much overall. And a lot of the support that we're seeing right now is because of the euro bounce. The Italians agreed to not spend as much money as they thought they were going to spend before. And of course, that makes the euro much happier because the European Union wins again. We did a dip all the way to the 38%, which is a pretty decent move, but we're right back above the 50, which the 50 happens to be at the upper band of the line from before. It's been catching support all the way through. We had just a slight break of the support there. However, we knew that was coming because, and again, we talked about this. This is where that steel crosses the red, letting you know, hey, you could have a little bit of a slowdown. And then what you're looking for at that particular point is some kind of a residual bounce from midterm buyers or that. Weakness still prevails, but the fact now that you've got steel taking over orange doesn't produce a bullish snake yet because you don't have the tongue in place, which is probably why we're seeing just a modest move so far. And of course, no reason to be in treasuries unless you think that the sky is falling. And there are plenty of people who do. I think it was an interesting one. They had a little report. They said that after Trump's election, it was Democrats who bought bonds and Republicans bought stocks. So interesting view on the optimism of what a business person. I remember election night telling everyone to buy that dip in the futures when the S&P was down 100 points. That was a while ago, and look at where we are now. And I was first one saying that 3,000 was not inconceivable because once you start the market moving in the right direction as far as economic growth, particularly beyond that cap that had been arbitrarily established of keeping things under a 3% growth rate, you activate an engine that moves forward, particularly with inflation and that we haven't seen in a decade, and that has to be priced into the market value. And a lot of people don't take that into account because it hasn't happened in so long they've forgotten. And that's literally what happens. People forget. But they're not going to forget this oil situation because that rise in price, and again, very interesting because there is more than adequate production. But can you refine it all? That's going to be the question. There are no real tensions. So someone's doing a nice manipulation. You gotta love it when that happens. And of course, I said gold was going to start to spike off this. We had finally seen that we had improved significantly with the shakeout in that. It was just a matter of we're going to get some activity from it. And I said this upper line right here would be the range right around that 114, 85-ish range would be more than adequate to break out from the move. Certainly poised for it. So intraday. Well, this was good stuff. So we started with the gold bar. We made new lows off of it. Then we got the Azure started to rise. And that actually produced, can't see it because I don't have enough room on my chart right here. So this is one of those where we go into format there, and I need a little bit more room down at the bottom of my chart. And you can see there's going to be a P right down there that was a pivot. And what I've done for this is I'm just running the normal GAM function paint bar, but then I added the Deocon paint as well. And because the GAM function was on first and the paint bar second, it shows up underneath the pivots. But certainly a pivot came exactly the same time we get the buy signal. and that was right over the 23%. Still, it produced a little bit of a, this is the thing about some of those longs, they still fight big range bars coming back and forth as it was working its way up. And then we had late signals for a little bit of short, didn't do a whole lot, and then we ended up obviously coming down to this new buy configuration, but of course you had cyan under red, so at that point it was sort of a moot. But once we got into the positive extremes, we started with a couple of little signals, but the clearest ones came right up here as we, well, literally just saw the expansion of the orange, green crosses below, and it happened to cross below red. Ideally, you like to see this situation where red comes over first. I mean, the steel comes over the red and then back below. Can't always get that fortunate with it. You ended up with a secondary full DOC spread right here. Pretty much identical spots. It still took some heat, but eventually did exactly what you would expect, which is to fill this positive extreme right down there at the 26 3/4 range. Blew through it, hit back to our old algo number here at the 925 range, and once it filled that in, reset with a new buy configuration. However, it was dipped below the red line, so once you saw the overbought, it was an opportunity that you knew you were going to come back and revisit that, and it's exactly what it did. And then all of a sudden we got that nice little pre-market pop, which is currently going right now. So gold above the 50% has, well, moved to the highs. No real shocker right there. That you're matching those same highs on a much lower shakeout, even though it's broader. It's another one to look for, because again, this is why I like this short configuration over here a little bit better, because I was making matching highs again on my lower shakeout that was a continuous run. Once you have this dip below, you've effectively eliminated that prospect. This becomes its own new one. It's still worth relative comparison because it kind of gives you an indication that a lot of this is happening on light activity. And that doesn't mean they can't break up to the new high. But the key at that point would be then looking for the retrace that then matches that high or gets close to it, but on a much weaker shakeout reading. So those are always the keys to look for. But this one is just one of those where you wait for it. Now we've got new positive extremes, but they've already been filled. So it doesn't give you any definable reset at this particular point. So we'll wait till something new develops. In the interim, it's still a decent long. We can see that the pivots came in perfectly and produced exactly what you would expect as you have that improved rising red. That's the long and the short of it for now. As always, I'll put up relevant charts as they're necessary. Trade well. We'll talk again later.